here we go. So our roadmap told us this morning to look for this. So we came out and we established at 8:15 this morning. I marked up these levels for you. You can do the same thing on your own charts. You can find out where the counter trend traders are in the market and when the market can get from a balanced market. We were in a balanced market this morning in between HVA and LVA, low value. That's called a balanced market. This is where the market's balanced. So I went over 30 minutes this morning. I went over how can we trade today's session with the Fed news coming out at 2 o'clock this afternoon. We have Fed news at 2 p.m. this afternoon, Fed rate. So what part of the market is the most vulnerable part of the market where we can see a possible home run hit? A 10, 15, 20-point possible run. We established that this morning before this breakout even happened. I said this is where our balanced market is. It's in between HV and LVA. We talked about this for 30 minutes on the microphone. I said this is our balanced market. The buy stops should be just outside of this high value area. This is where the buy stops, because the counters, you can see they got rejected at this level. The counters start coming in at that level, rejected level. Got rejected over here again. Rejected. Another one. So we said if we're above the control point, we're always bullish. If we're below the control point, we're always bearish, right? So, but what we want to do is we want to try and find the getting into the market and try to get into this big area of an imbalance market. So this is an imbalance market that we're in right now. There's no supply above us. Why? Because we know where all the trading participants are. Not because of our opinion. Our opinions mean nothing. It's about where all the market participants have been in the past. And that's going to create a natural hole in the market. So we do this on a week-to-week basis. We find out where these holes in the market are, and then we can trade our V-bottom, V-tops, and our liquidity grabs into these imbalance markets. So we established this morning, I showed you yesterday where the imbalance was. There was no supply above us right here. Look at this. None. I said there's no supply above us. So if we get above HVA here, we could have a big run. We just had a 12-point run, 13-point run, and I talked about this exact trade, where to pull the exact trigger at on this breakout, and I'll show you in a second. But this told us, yesterday's profile, there's a big hole in the market, because all we got to do is look at the daily value, where the price is at, and if price is in between HVA high value area and above low value area, the market's balanced. And I said, if we get outside of HVA, it becomes imbalanced because I got no resistance until yesterday's participation, which was high value area. That's the most participation, which is 57.1250. So 57.1250 is our target. So we're looking for a run break. I said a breakout of this 88.25, 88.50. Our target gap fill would be 57.25. Now, two ways we do that. One, we said, with our long-term chart, the first thing you do when you first log in is find this gap. We got to find the gap, right? Find the gap in the market. Where's the hole in the market? We did that. I marked those up for you at 8:30 this morning. We talked about how we want to take advantage of this no supply above us and get into these markets. Two ways you do it. One, you want to stick with green. Right now we're green. Right now we're green. That's our dual trend filter. We said we're going to be in a stronger market if we get a V bottom above our outer zone. Has been tested for 30 years as the best zone to reverse price on the S&P. So if it's green, we're net buyers. And then my proprietary Renko bar type, which are these inner green dots, if they're green, we have what's called a dual trend filter up. So we're looking to buy retracements after a V bottom and take the first liquidity grab after a V bottom. Okay, that's one way to do it. Green, look for a V bottom, let the strategy fire you in on a liquidity grab buy, okay, with our automated strategy that you can fire in. All right, that's one. The second way is to look for a failure trade. So the first thing we do is we look at the roadmap over here first, market profile. That looks at all the market participation in the market. it lets us know where the buy stops are going to be hitting to catch the wrongly positioned traders, which are the counter trend traders. So we knew if we broke above 56.88 and a quarter, half, the market is in an imbalanced market. It can run all the way up to 12. I said we have over a 25-point possible run in this market. And it sure enough is producing exactly what we talked about this morning. So we said, hey, let's try to get into this gap in the market by two ways. One, let it turn green, look for the first V bottom and liquidity grab, or two, failure with trend. What's failure with trend? We have our big chart up here. Currently at the time when I was talking about this on the microphone, we were talking about this big candle right here. This big candle was red. I said they're trying to grab liquidity. What does that mean? They're trying to grab liquidity because it was red. You don't look at the current candle that's red. You look at the previous candle and see if it was green on this longer Renko chart. If it was green, it's saying they're trying to buy liquidity. So we want to look for what? Failure with trends or V bottoms with liquidity grabs. The failure with trend is when you break outside of the line in the sand. The line in the sand is always our outer edge. Remember, we back tested this for the last 30 years as being the best zone. So if we ever violate the outer zone, by two candles or more right here, then what you want to do is you want to try to get long that market after it violates two candles. You'll see a yellow trigger come up on the other chart, and this is the result we got. We talked about this morning because the long-term trend was up. Our big chart was up. Now all we got to do is break the trend on the outer zone for a possible trend change, because our big trend is green all the way up this morning. We've been up since midnight. We've been all green. The distortion in price been happening where the smart money has been buying liquidity grabs all morning into the Fed so far. All morning. Distortion in price, so on. So our target is up here at 57.12. Where's our entry? The yellow trigger candle that happened, our failure that happened right here. 56.90 and a half is the first yellow trigger. That's a failure trade right there that we talked about, only taking with big trend. Big trend was up. We could take that. That fill was 56.90 and a half. We're already at what? It's still running. 07. 17-point move. And we talked about this big move this morning before it happened at 8:30 this morning. I said, look for this to happen if we get outside of the line in the sand, which is the outer edge. The second trade that we talked about is talking about the first liquidity grab. The first liquidity grab, the first V bottom if it's in a stronger market. The stronger market came in here. Here's our inner dots. Our inner dots, price is above the inner dots. There's liquidity grab. There's your first strong buy. 04 fill has been as high as 06 3/4. Target still is 12 and a half. So we had a dual trend filter V bottom, and then we had more importantly, we've had this breakout that happened this breakout happened exactly at our breakout on our liquidity grab, on our market profile of 88 and a half. Look at this. It broke out exactly at our key level. Right there's 88 and a half. There's our entry right here. Beautiful. We talked about this entry this morning, this exact candle. We talked this morning. Now, let's say you want to wait for the yellow trigger for the failure trade and take the first liquidity grab after that. So the first liquidity grab after 947, right here. Your fill is right there on the liquidity grab long. You can use the auto trader to fire you in on LG1 that you have. You members have it. You can let that fire in right there. So this is an LG1 trade. on our automated strategy. Taking the first liquidity grab with big trend. And here's a trade I talked about all morning. I talked about this for 30 minutes on the microphone. LG2 trade, V bottom, green, stronger market above. We talked about this. This is a strategy to fire in the trade. Your live fill should have been 57.05 and a quarter. First liquidity grab right here, 57.05 and a quarter. Here's the first distortion of price. Our automated strategy should have fired you in right there at 57.05 and a quarter, 57.05 and a quarter. The market has now moved up to what? We almost hit my target. We talked about this target this morning. There it is. We just hit our target, guys. Our target just hit. My opening gap just filled, 57.12 and a quarter. All right, who jumped on this run? Who got this run? We talked about this from 8:30 to 9 o'clock for 30 minutes straight about trading this opening gap. Good job, Aaron. Way to trade the system. You had two big shots at it. You had my failure trade, which we talked about only taking with trend. Good job, Gary. Way to take advantage of it. And we talked about the stronger market. Only trading green. The retracement. What did I tell you guys this morning from 8:30 to 9 o'clock? I said, listen, strong markets are hot markets if the retracement stays above my inner trend dots and the outer zone if it's green or red. What do we do? And I said it typically happens after the New York Open. It typically happens right after the New York Open. What did we do? Right after New York Open, it's only 10:08 this morning. There's our first retracement. There we go. Where's it go to? This is not my opinion. My opinion is worthless. Your opinion means nothing in the market. Let the market tell you where it wants to go. We have our game plan on our opening gap. It went right to it. It stopped to the exact tick. That was our game plan. We want to trade this, guys. We want to trade this. There's no supply. We don't use Fibonacci's or pivot levels, S1, R1, all that baloney. Why do you think NinjaTrader and TradeStation and Thinkorswim, they have all those indicators for free for a reason? It's try to get you to counter trade the market. We buy high and sell higher with this system. We're not trying to catch a runaway train here. This is a runaway train. This is a runaway train. But all the novice traders out there that want to counter trade this market, oh, it's divergence, it's against a pivot level, it's at a Fibonacci level. You know, they're getting taken to the woodshed. Why? The market is strong. Why? Because look, our dual trend filter is green. Look at these entry levels. There's our entry level here. First liquidity grab on an LG1. There's an LG2. LG2 just means that we have a green dual trend filter. And we talked about the market being strong, very strong. If it stays above my inner dots with a V bottom, there's your first liquidity grab buy. Your automated algorithm, you can turn it on, let it enter for you. Now this just has a $100 stop loss, $100 profit target, just to show you guys how it works. But the algo will do the work for you. So you can see here's your profit target is $100, stop loss $100 per one trade. You can make this out to a $500 profit target, stop loss $100, and you can trail it with my trailing stop loss I have built in. You can do that also, but this is the algo getting in at 57.05 and a quarter for you, right at the first liquidity grab with trend. Okay, so very simple. We planned this out this morning, right? We talked about this for 30 minutes, 8:30 to 9 o'clock on the microphone. We said, hey, let me give you a quick summation of what we do. We mark up our profile charts and say, hey, where's the balanced market at? Where's the balanced market at? Balanced market will be in between our daily value. Red HVA, green LVA. Very simple. We said that's a balanced market. The buy stops will be just outside this balanced market. The sell stops will be just below this balanced market. So the buy stops will be just outside of HVA. The sell stops will just be below LVA. That's catching all the rolling position traders. That's catching all these counter trend traders that use all these indicators out there and they counter trend trade the market. We want to buy high, sell higher. We don't want to try to catch the high. Anybody that comes out and says, what's your strategy? I buy low, sell high. I've never seen it done. I trained thousands of traders. I was a guest speaker at the Las Vegas trade show with over 6,000 traders in the world, and I didn't see one or talk to one trader that's profitable that counter trend trades the market, because the market preys on counter trend traders. It's about order flow. Order flow is where the buy and sell stops are being placed. If the counters are shorting the market at value areas, high value area, then their buy stops have to be just outside a high value area. If the counters are buying low value area on Fibonacci levels or pivot levels, then their sell stops are going to be just below there. So how do we take advantage of that? How can we get in the market and take advantage of the rolling position traders, the rolling position algorithms? We want to look to buy imbalanced markets and find our targets. Our targets will be previous market profiles. This is our previous market profile level. I marked this up at 8:15 to 8:30 this morning as being our target for today. So we knew the target at 8:30 this morning. We knew the target when the price was all the way down to 86. So 56.86, we knew our target today was 57.12.5 at 8:30, an hour and a half ago, right? Because this is our roadmap. It tells us we want to trade imbalanced markets. Imbalanced markets are holes in the market where there's no participation in the market from previous market profile. So how do we take advantage of that? How do we enter the market then? We enter the market by using our algorithm. So we have a dual trend filter. The dual trend filter tells us very simply if we're going to be a net buyer or net seller. If it's green, green, meaning our outer zone here is green, and our inner proprietary trend dots are green also. So this tells us that we're green, green. Here's our outer zone that's back tested for the last 30 years as being the best zone for the S&P. So we know if it's green, we're net buyers. If it's red, we're net sellers. Then our inner trend dots, which are my proprietary Simrenko bar type. If the price does not close by more than 2 candle closes below these inner trend dots, we talked about this morning for 30 minutes, again, that the market's super strong. And if you get a V bottom, you're going to look for the first liquidity grab buy to propel price. And that's what it did. So our algorithm right here picked it up. Now I just have one contract here to show you, for example, with a $100 profit per trade and a $100 stop per trade, but you guys can adjust it to up to 6 contracts. You can adjust your profit target to $500 per one contract, $100 stop loss per one contract, etc. But this told you your live fill would be 57.05 and a quarter using our automated algorithm to fire you in with V bottoms with trend. Now what members will have is these algos will only take trades with overall zone trend. So if zone trend is green, it's only going to buy. If zone trend is red, it's only going to sell. Okay, so but you had 2 shots at it. The only 2 trades we have in this room is this. It's very simple. V tops and bottoms with dual trend filter and taking the first liquidity grab trade. Right there. This is the first V bottom that happened, the first big green candle after a red retracement. And our first liquidity grab, first distortion of price was right there at 10:02 and 6 seconds. That's your first trade right there. The fill was 57.05 and a quarter. It's been as high as 57.1375. All right, 8.5 points just on this move right here. Potential. The second trade we have in the room is called a failure with trend. And I talked about taking this trade this morning for 30 minutes before it even happened. Failure with trend is this. Our big trend chart is this level in the trading room. It tells us if they're net buying or net selling. The smart money has been net buying all morning since midnight. You can see it. Distortion in price, distortion in price, distortion in price, distortion in price. So what I recognized is right here on this big giant candle was red this morning. This candle was red this morning. Right here. Sorry, this one. This candle was red this morning. Big red candle. And what I tell you guys in the room, I said the smart money is looking like they're grabbing liquidity, right? So we want to stick on the side. The long-term trend is up. You don't look at the current candle like this. You don't look at this over here because it's red. That's not the important information we want to get on this long-term chart. We want to look at the previous candle. If it's green, then it tells us they're trying to buy liquidity. So if they're trying to buy liquidity, we want to take our smaller charts, our smaller Renko charts, and be net buyers. When it's green, green, or when you break the outer zone, the line in the sand, here's the outer zone. You have a yellow trigger right there to buy or take the first liquidity grab with our automated strategy, which the fill was 56.92.5 and got as high as 13 now. And we talked about this if it broke out in that big opening gap. We talked about the big possibility of a 20 to 25 point run in the S&P at 8:30, 9 o'clock before this even broke out. So those are the only two trades that you have in this room. V-tops and V-bottoms with dual trend filter trend and taking the first liquidity grab with the automated strategy, or taking when it first breaks my line in the sand, this outer zone. So now the line in the sand is here, 5,700. But if it would close below 5,700, would we take this short then if it closed below the line of sand? No. Why? Because the big chart, our big trend chart, says they're buying liquidity. They're not selling liquidity. So if they're buying liquidity, the smart money, what do you want to do? We want to ride the coattails of the smart money. We want to buy this breakout. And this is what I projected between 8:39. We talked about this over and over again. Only taking breakouts of the outer zone, the line of the sand, with the first liquidity grab. And you can do it with the strategy if you want. You have an LG1 strategy. You can do that. All you members have that. And if you don't want to take those, you can take green-green trades or red-red trades where the filter's only red-red, green-green. And I talked about this over and over again. We talk about it every week after week after week after week. And we said, you can position yourself in only strong markets by doing this. By taking trades above or below my inner trend dots with V-bottom, V-tops, and taking the first liquidity grab after that. If it doesn't close by more than 2 candles below my inner trend dots and you get a V-bottom, that first liquidity grab buy is the best buy. What was our target? This big gap. So not only did we know exactly where all the market participation was, and we know on a daily basis, we know our next big opening gap. Where's it at? 57.12.5. It should run to 57.33.5. It's not my opinion. That's order flow. That's not using a Fibonacci indicator. It's not using a pivot level indicator. It's not using divergence. It's not using the max. Not using moving average crossovers. All garbage. Why? Because it doesn't tell you true order flow. Order flow, you need to know where the buy and sell stops are, where you're catching the wrongly positioned traders. This algorithm will do that for us. It lets us know where all the trading participants are. We're not using a standard 30-minute market profile. Doesn't work on catching the sweet spots. We want to catch where the market imbalances are. The next imbalance is going to be in here. That's our next level on the next run in the market. So now we're trying to V-bottom again. Trying to V-bottom again, trying to get another liquidity grab buy to propel us up with big trend. We're in a stronger market still. Okay, so that's the two trades that we look for. V-top, V-bottoms with the dual trend filter, taking the first liquidity grab And then if you ever break outside of the outer zone, our outer zone's been tested for 30 years. So if you ever break this line of sand like this, you want to make sure it's with long-term trend. That's it.